Good afternoon, George Cavaligos for HFT Bonds. I wish I would have listened to my first email last night. I hope all you guys are signing up on Twitter. I don't know what time it was, probably about 7:30, 8 o'clock last night. I sent out the first little Twitter thing. I put it on the chat room too. Nobody else was in there, unfortunately, but it went out through Twitter. So make sure you guys all sign up on Twitter. I nailed the stupid high at 21.5 last night. Initial email said I'm looking to cover in the 10 to 13.5 area. Well, I got stepped out basically at 19.5, made a tick on the trade. The market went back up to 21.5 after that, but I think I would have been fine just waiting out for a trade back through 21.5, or if I would have covered the first time down at 13 instead of waiting for the second time down at 11. Well, whatever. I need to refine my technique there more than anything, and I'm going to have to trade more short term and less looking for big moves here, at least on the downside. I think we're seeing our downside corrective moves and upside wave moves or impulsive moves. Last little trade up here from the lows this morning, I should have been all over it, and I wasn't. I'm really going to concentrate on looking for buy spots here. I think the next big move is up. The market's still going through a corrective phase here. The 10-year couldn't get over 21.5. It still has that big sideways consolidation pattern going. Some people are calling it a head and shoulders. It might be, but we'll know if we get the break of the neckline. And the same thing with the bond chart that I sent out. The 149.03 to 05 area is the neckline. You want to get two 30-minute or 1 hourly close below that neckline to confirm a break. We haven't got that. Now we're right back up near the highs. Bonds went up, took out this morning's 149.29 highs, went up to 31, and then snapped right back down to 25. So it just seems like the market's still caught here. We're struggling as we're rallying back here. If you look at the big pattern on that chart that I sent out, you can see how I have the fib retracements on the side. We're bouncing up against the 618 retracement of the whole sell-off that we've seen from the all-time highs in the bonds down to that 144 level and back up. So we're struggling with an important resistance level here initially, and I think it's going to take more than a day and a half or 2 days of corrective sideways to lower moves before we can really get through it. Now, if we start trading up above this 150.01, 150.04, 150.08 area, or above 133.27 with decent volume, you got to go with those trades. The market's going to go higher. And I think we eventually will. I just think the market needs to play out some of this sideways corrective move here. We rallied, 8 days straight up, then we had a 1 day correction, then an uptick, then another day correction. It takes more than 3 days to correct, I think, a violent 8-day rally of, what did we rally? 4 handles on the 10-year and 6 handles on the bonds, I think. So I think we just need a little bit more time, but I'm not going to fight the rally. I will look for spots to buy the dip. I'd love to see another trade back down towards the 133.13 to 133.15 area. I think if you got the staying power, you buy it around there with a tight stop. We'll see what happens. No news tomorrow. All these commodity markets today put up what could be important turning points where everything made higher highs this morning and then either closed lower or closed unchanged. You're seeing the dollar index creeping right back up all day today after a big sell-off from that 80 level all the way down to 79.50, 50-cent rally, and then we've been grinding higher all day. That's not what I wanted to see. I wanted to see that dollar index break that rising trend line at 79.40, and it never did. So we got to keep that in mind. And it just tells me that the risk-on trade has more correction to go before we can get back into some kind of a trending, risk-on market again. And we're just not there yet. So sideways to a little bit lower early tonight, I'm hoping, for the bonds and notes. Give us a chance to buy the dip. I can't get a great count up here. The market's been so choppy, I'm not sure where we're at in terms of a good wave count up here. I think we're still looking for maybe one more dip at a minimum to kind of give you some symmetry with the correction that we've been seeing here. And we'll see how much of a dip we can get out of it. So that's about it. Have a great night. I'll see you guys bright and early. Go Bears. Bears in Dallas tonight. I'll make sure I have the computer up and running and taking a look at what the markets are doing here. Hopefully we can get a little bit of a dip here. Where are we at closing here? Equities are closing. Mini SPOOs are up a little. Nasdaq's down a little. And the Dow's up 85. Nasdaq leads on rallies. That's the thing you want to see. We're not seeing that today. So look for more corrective type trade here. That's my whole mantra today. Have a great night, guys. See you tomorrow.